Welcome to the channel Get Rich. Today we are going to look into a consumer products company. So we are going to look into what kind of revenues they are making and what are the different products they are getting their revenues from, and what are their financial statements look like, and what is the valuations of the company with the price target. We'll estimate the price target for the next 1 and 2 year. So let's get started. Today the company we are going to look into is Colgate Palmolive. So Colgate Palmolive manufacture consumer products in the oral care and body care area. So the company products include the cosmetics, they have toothpaste, toothbrush, and also some of the body care products. So if you look into the Colgate, we know that's India's number one penetrated brand, almost 89 households buy Colgate. More than 2/3 of households buy Colgate every quarter. So they have a huge market share in India. So they have almost about 89% of penetration. So they are so much penetrated that their growth cannot be get from more penetration, because they are almost in 89 to 90% of their penetration. But it's requiring by they can keep up their sales, but increasing their penetration more, it's not going to drive their revenues. Maybe they should introduce more products, so that's where their growth should come from. So we'll look into that in detail. So currently they have accelerated double-digit growth. For example, in the Colgate toothpaste sector. So please note that this also include volume growth and also the price growth. So what is volume growth and what is price growth? So volume growth is how much the number of toothpaste or the number of products they sell, and the price growth is how much of that is coming from increasing the price of that particular product. So we need to know both volume growth and price growth, which is leading to the revenue growth. So we need to know where the growth is coming from. Is it a volume growth? Is it a price growth? Usually combination of both would be good. So then if you look into some of their parameters of Colgate Palmolive, they have a market cap of about 40,000 crores. They are trading at a stock P of 37. So their return ratio, return on capital employed is 92%, return on equity 75%. Very, very good. It's of course it's a consumer FMCG company. So their price to book value is 23.7, and if you look at their debt, they almost have zero debt. And then if you look at their price to sales, it's also 7.79. So let's look into their price chart. So before going into that, some of their key fundamentals. So their net sales is about 4,800 crores, and they have a gross margin of about 67.8%, which is one of the leading in their segment. And their advertising, they are spending about 13%, and then EBITDA is 31.4%. They have a profit in the previous financial year about 1,035 crores. Let's see how the valuations pan out. If you look into their market price, so they recently reached about 1,800 rupees, and currently it's trading about 1,400. So they had some price drop recently. So if you look into some of the technicals, for example, I'm more of a fundamental guy, but if you want to look into the technical side of things, so they have a major support trend line, and they have also a resistant trend line. So if you look into that, they are trading at the support trend line or at the lower part. So if you want to do some kind of swing trades purely based on technicals, then it's right time to enter, because it's almost coming to a support line and support trend line. So that's technical wise, but we need to look into the fundamentals of the company and the valuation. So let's have a look at that. So then if you look into their P ratio, so currently they are trading at around 37 trailing basis, or 35 to 36 in the forward basis. So usually they were trading somewhere between 35 and almost 55. So they reached a peak of 55 at some point, and then now currently they are trading at an average P, which is 37. So they are currently trading at an average P of 37. So their P is on the lower side. But then even though their P is on the lower side, we need to see whether this P is valid for their growth rate, because always market prices the company based on their growth rate. So how much they can able to grow their sales, how much they can able to grow their bottom line or the net income. So we need to know whether this growth rate is justifiable for the PE it is trading at currently. So then, if you look into their business segment, so their toothpaste is their biggest segment. As I said, they also have some products of body care in a Palmolive brand. They have body care and hand wash kind of products, but I believe they have most of their revenues are coming from toothpaste, toothbrush, this category. This is a huge growth driver. So if you look into their toothpaste volume growth, how much volume growth it is having in the past previous quarters. For example, in 2017 to 18 quarter, they have some degrowth, and then they were doing about 12% in one quarter, and then 4%, 4%, both 7%, 5%, 4%, 4%, 2% degrowth of 8%, 0%, and then 4%, 6% in fourth quarter financial 2021. They did about 16%, and then quarter one financial 2022 8%, 4%, and 1%. So most of their quarters they are doing single digit growth, volume growth. So that's also something we need to know, because they have almost 89% penetration. So yeah, they could not penetrate more, because it's almost 90% they have a market penetration. So that's already great. So yeah, increasing their volume growth more is going to be difficult for them in this toothpaste segment. So yeah, usually we look into their which of their main products they are bringing revenues, and what are their breakdown of the products and so on. So yeah, Colgate, it's a big company, and their most of the revenues are coming from toothpaste and toothbrush category, I believe. And then they have another brand which is Palmolive, which is also a body care and hand wash. They don't get much of the revenue from this segment, I believe. So now we are going to look into what are the new launches, because as I said, the growth rate is the main concern for them. So they were growing at a top line of lower or higher single digit or lower double digit. But then where's the growth is going to come from? So let's have a look at some of their new launches. So we focus this video of their main new launches. What are their this company is going to launch in the or currently recently launched different products. So if you look at their recently launched products, they have Colgate Valuation brands for mouth product spray and oil pulling, and they have different toothbrush, and then they have different toothpaste, and they also have some of the Palmolive body wash and hand wash and hand sanitizer releases. So let's have a look at that in each of the categories. So first new release I want to look into is Colgate Valuation. So they have Colgate Valuation for all-round mouth protection. So they have oil pulling. So what is oil pulling? So it's an antioxidant rich blend of oils to detoxify the mouth of overnight impurities. For example, it's just a blend of few oils like sesame oil blended with eucalyptus, basil, clove, and lemon oil. So you just have to rinse your mouth with the oil, and then that will kill some of the bacteria. So that's going to provide clean your mouth and good health to your gums. So that's oil pulling. That's a new product they are launching, and they are also launching for example, mouth protect spray. So you can spray your mouth to kill germs that comes in a smaller packets. So they have a strong consumer repeat. So already 30% of their customers are buying repeatedly. Since it's a new product, 30% repeat is very good. And if you look into their other things, like they are already available in 100k stores and counting. And if you look into their other products, so these are two products, and they also have Colgate Valuation toothpaste. So that's their ad for this is sixth most loved ad. So they are having sustained increase in loyalty of more than 50%. So that's also good. They are also enrolling into this kind of Ayurvedic kind of segment. So this is Colgate Valuation. They have oil pulling, mouth product spray, and also toothpaste. So this is the launch they are going in. So this can give some of their revenue growth. And if you look into their Colgate White Instant, so that's the second new one. So what is this? Is used for teeth whitening. So yeah, they say most of the customers are many people are searching how to whiten their teeth. So that's how they come up with this product. So to whitening of teeth. So they have a product rating of 4.3 in Amazon, and then it's also increasing their market share. So this is the second product. And then they have third one, which is Colgate Magic. Is especially focused on kids. For example, it's difficult to make them brush. So in order to make them playful, funny way to do brushing, they also introduced a first augmented reality based toothbrush. So you have a little screen in front of them. While you brush, you can see different kind of augmented reality things in there. So that's fun for them. So that's kind of a new product they come up with for kids. And if you look into their other new launches, which is Colgate diabetes toothpaste, is especially focused on diabetics patients, so they are more prone to more bacteria are in the mouth, and they are more prone to their gum in their teeth. So this product, the toothpaste, is especially focused on diabetics patients. So they are the number one SKU on ePharma, 4.3 rating, and also they have 20% repeat rate for this particular product. They are available in 25% urban pharmacies and direct dentist reach. So they are also introducing this kind of toothpaste in this particular segment. And also let's have a look at the toothpaste. So before having a look at the toothpaste, so these are the new products they introduce. Most of the products, or all of the products they release, are premium brands. For example, it's focused on some kind of special niche, so they can sell these particular paste for a higher price. So it's a kind of premiumization of this toothpaste brand they are doing. So they also believe the premiumization of toothpaste will play out, so that can increase their margin. They are already having very nice margin, so they can still they believe they can still improve some few of their margin. So so let's have a look at the toothbrush. So they also recently launched antibacterial brushes, and they have a gentle brand, and with the different flavors and antibacterial thing, and they have a top 5 bestsellers and top 10 bestsellers in Amazon. They have this particular brand of a toothbrush. And also if you look into the Palmolive brands, they also introduced body wash and hand wash. So that's also some of their product new launches they did. And if you look into their e-commerce business, it was growing nicely. It's 23x in the past 5 years. So that's great. They are also increasing their market share. They are present across Flipkart, Geomart, Big Basket, across most of their platforms. And if you look at their platform they are developing, they also have Dentist for Me tele-dentistry platform. This is for during the pandemic, it's very difficult to visit the dentist, so they have tele-dentistry. So you have kind of app, you can find dentist and then consult with them remotely. So that's also something they are developing platform. Something completely different is also telehealth. I'm in that particular sector. I'm also bullish on telehealth. So I am mostly tracking telehealth in the US market. So I'm personally I invested in telehealth company which is called Teladoc in US market. So that's also recently I bought them. So it's in a very attractive very attractive stock in telehealth, for example. But that's in US market. If you're interested in US market, that's something for you. If you're not interested in US market, then you can just skip this part. And then if you look at their advertising sense, so they are spending a lot of money in advertisements. So they have different kind of advertisements with different celebrities, and also they have digital marketing they are also doing digitally. So if you look at their financial statements, so they are increasing their sales, somewhere in the higher single digits or lower double digit. And if you look at the gross margin, they are constantly increasing, and then dividends they are consistently increasing. And if you look at the revenue growth, it's 6%, 5%, 4%, 5%, 7%, 20%, 12%, 5%, 4%. So it's at somewhere in the single digit territory, and they are increasing their gross margin. That's good. And if you look at their financial statement, quarter over quarter, for example, their operating profit is 381 crores in the last quarter, and they have a operating margin of 30%. In March quarter, they even did 33%. So their net profit is increasing. If you look at their year over year sales, they almost did about 1035 crores in the last year. So their sales growth for 10 years CAGR is 8%, 5 years is 5%, 3 years is 5%. And if you look at their profit growth, 10 years is 10%, 5 years is 11%, 3 years is 15%. So they increasing also their, even though their revenue growth is a little bit less, they are increasing their margin to have a bottom line growth. So they have a nice return on equity, 65%, 56%, 59%. That's great. And if you look at their balance sheet, they don't have any debt. It's a very good company. But also in the income statement, I also wanted to mention that they have a dividend payout ratio of almost 100%. So they are paying out all of their net profits to income. So it also depends what kind of investor you are to invest in this company. I will come back to this topic when we are discussing the valuation. So then if you look into their profit growth, the analyst expectation, the analysts are expecting in 2022 it's about 1100 crores or 1030 1040 crores, and then 2023 1100 crores, and 1024 is 1200 crores, around that range, the ballpark. That's the different analysts are expecting. So they are not expecting them to grow in double digits. So they are expecting, analysts are expecting them to grow at 6-7% or maximum 8%. That's the most of the revenue revenue or bottom line expectation for this company. And if you look at the shareholding pattern, so the promoter holding is pretty stable. And also if you look at their mutual fund holding, mutual funds are decreasing their shares, but in the past several quarters it's just the same, but it was decreasing from, if you compare from December 2019 or March 2020. And if you look at their historical FIA holding, it's also, they are slightly increasing and then currently slightly decreasing in the December 2021 quarter. And if you look at their mutual fund holdings, it's held by SBI Magnum Global Fund, and then Mirae Asset Mid Cap Fund, and then Tata, SBI, Nippon India Arbitrage Fund. So there are a lot of funds they are holding this particular company. And if you look at their valuation part, so their current P is about 35 to 37. So they even reached 45 at some point, as I said. Or the median is around 37, or 42 is a little bit, and the average is somewhere around 37 to 42. That's their average P. So if you look at their on the left side, you see for the Colgate, and then on the right side for the industry. So if you look for the industry, so in the industry is currently trading at around 42.2 average. It even reached 50 at some point, the industry. So the industry is currently trading at 42, but Colgate is currently trading at around 35 to 37. So the reason being their growth rate is slowing down. So I think most of the analysts or most of the investors are looking into their growth rate, and their growth rate is decreasing. That's some concern in this particular company. And also if you look at the valuation, so their revenue in 2022 it's about 5000 crores, in 2023 5500 crores, 2024 6000 crores. Net income 1030 crores for 2022, 1112 crores for 2023, and 1200 crores for 2024. So it's 8% growth I'm expecting for the next 2-3 years. So if you look into their price target with the current valuation, which is 37 PE, so then it will be 1513 rupees for 1 year and 1634 rupees for 2 years, with the price cumulative growth of 4% and 12%. And if you look at the price target of PE 35, because the growth is slowing down for 8%, 7 to 8% growth company, we could not put a PE of 40 or 50. It's very expensive, so it's growing very less. So 35 PE is even expensive for a growth rate of 7 to 8%, since they are in the FMCG sector. So we can put a PE of 35. So if you can put a PE of 35, then in 1 year is 1431 rupees, and 2 years 1546 rupees, with the price cumulative growth of -2% and 6%. But then these price targets are based on their revenue growth estimate of about 8%, and also net income growth estimate of 8%. If they can do more bottom line growth, they can, if they can launch a new product, for example. So they currently have only manual toothbrush. If they can come up with the electric toothbrush or something else, new products, if they can launch, and if they can grow their revenue in a higher side, then that's a different story. Then the PE can re-rate, and then the stock can fly again. But then with the current growth rate, the PE of 40-50 is expensive. So I believe this stock is going to trade at around 35 to 37 unless they show pretty good growth numbers. So that's what the analysts are also concerned of their growth story. So but then if you ask me whether you want to invest in this company or not, that depends on what kind of investor you are. Personally, I will not invest in this company because I am mostly an aggressive growth investor. So I'm kind of value investor, but I want to balance both value and growth. So I am mostly an aggressive growth investor. So this company is very less growth, but they are paying a dividend already. I think it's a dividend yield of about 2.5 to 3%, I believe. So if you are, for example, a conservative investor, and if you are conservative investor with your for example, your goal is to get a dividend income, so then in that case that's a different story. It's a pretty solid company, and then it's going to at least sustain the growth for 5-6%, 7% in the foreseeable future. And if you are a conservative investor with the view of a dividend income, then it's a different story. Then you can buy and hold this stock, and you can get a very good, very nice dividend income. And even ITC is also that kind of a stock. Yeah, ITC even have a very good growth than this company, because they are they are also growing, and their dividend yield is even more higher, 4 to 5%. So if you are a conservative investor and if you want to looking for some dividend income, ITC is much better. And also Colgate, this company is also a very good company to buy and hold if you are that kind of investor. But if you are chasing growth, for example, if you are a growth investor, aggressive growth investor, I will not recommend this company to buy even after this company falls this much. So that's my personal opinion. You can have contradicting thoughts. So yeah, it's not a financial advice, it's my personal opinion. So if you like this video, like, share and comment. And if you are a new investor, please subscribe to this channel. And if you want to receive free newsletter, please subscribe to the free newsletter in the link below. So that's all for today, and thank you for watching, and have a nice day. Bye bye.